Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting today. I stream live Monday through Friday, 11:30 to 1 p. Eastern Standard Time. And this stream's about integrating Bookmap order flow tools with auction market theory using the volume profiles of chassis in the intraday developing timeframe. This stream is specifically about the business of trading and the idea of bringing traders together in a collaborative environment in the Bookmap server in order to leverage their collective experience. There isn't one way to trade. However, most of us go on the quest for certainty and confirmation, and we're actually in a business where it doesn't exist. So the business itself is actually more of a gaming process or a statistically based business. We only have control of, you might say, the game, same as the casinos. And then, of course, there's the gamblers. And even though the casinos pay the gamblers over time, assuming they don't change the game and they develop the discipline, which of course they have to just execute their games, play them the same way with anchored inputs. If they do that, over time they'll extract the dollars from the gamblers, and that's the nature of our business also. We take risk, and in order to have the opportunity to gain profitability, we have to pay overhead and expenses, which is paying the gamblers. But if you have a statistical edge, the dollars will, over time, flow to you sitting on the, shall we say, the house side of the table. And I hope that makes sense. One moment, please. Okay, just checking the chat. By the way, how are we doing in YouTube? You guys following okay? Now, something else to be thinking about is the current condition of the market. And the key to the business, so you understand, is a trade plan that has an edge. And the other part of it is the discipline to follow the plan. And today is a good example of a day that is, shall we say, behaving a little bit differently than what we often see. And the thing about being in an environment that's 100% random 100% of the time is to understand that anything can happen at any time. And if we can accept that, we also have to wait and align when the market is doing its thing. Does it fit our trade plan? And this is where many developing traders go off the rails, is they do not follow a plan and they have FOMO. They lose it, and they lose self-control. But the dealers in the casinos just keep playing the games the same way. They don't change them. They don't respond by paying the last, out on the last hand to a gambler. They just deal the cards for the next hand. And they already know they can't control the outcome. We can't control the market. We can't control anything. We only have ourselves to control. And if you lost control today, it's actually a good opportunity for you to go and review what stimulated it and why and what you can do about it. Because you have to understand this is an issue for all of us because of our emotional wiring. General disclosure, all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure. Trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember this isn't a trade calling room. This is for educational purposes only, and the purpose of this stream is to help you understand the business of trading. Now, let's go take a look at a couple things. First, Bruce's pilot program. It's about edge. If you don't understand edge or how to get one, this can go a long way in helping you develop an understanding on edge and the basic ideas on how to extract them. If you're not familiar with edge, this is a good first step to tiptoe, as they say, in the water. Put your toe into understanding this is the business of metrics. That's available to everyone in the Bookmap server. Also, you only have 2 days left to submit your mock-ups or trade examples and Bookmaps, annotated, circles, arrows, why, you took a trade, show that trade. It only goes to the end of the month, and that is, so we got 2 days. If you haven't done it, do it. You can get 3 months of Global Plus free. That's a $600 value. Also data included with it. Use the hashtag FreeBlueJacket, drop it on X, Instagram, or LinkedIn, and you'll be there. Nice jacket, by the way, also. So you get a jacket and a $600 value. If you haven't done it, time to do it. Now, this is the trading process hierarchy. Basically, auction market theory, which is how does the market work? Why does it do what it does? You need to understand what is the purpose of a market. It's to figure out what's too high, what's too low, and what's a fair price. It's very much like shopping in the supermarket, and I like to use that analogy because you're all traders, whether you know it or not already. When something is underpriced, you buy it, you throw three in the cart. If the price gets too high, there's price resistance, and you might buy it if you have to have it, but there isn't any line out the door to buy that can of tuna at $2 a can. So if the sellers want to sell the tuna, they're going to have to lower the price. This creates rotations. Now, in the supermarket, it doesn't move much, right? However, in our market, that rotation, so let's think time frame for a moment. The clock pretty much stands still in the supermarket, right? Other than temporary sales. However, in our market, it's the same process, but it's in a micro time frame or any time frame you want to call it. It could be 30 seconds, it could be a minute, 15, whatever you want to slice it up to. I always think of the market as a vertical integration of time. Like you guys think higher time frame, lower time frame. Well, in the developing time frame, it's really not clock based. It's really more participant based, and that creates rotations. The tool to see all of this is a volume profile. It's a distribution of volume. Remember the shopping experience. Fair price, high volume. Buyers and sellers agree to do business. High price, less volume. Overpriced at least. Then less volume, less buyers. Low price, too low. What's going to happen? The sellers then are going to stop selling it because the buyers are going to start consuming it on sale, and then they raise the price back up. This rotation takes place all over the place. Time frame, that's a function of what you want to trade, whether you're a swing trader or whether you're trading intraday as a day trader. The context, this is the hardest part of this whole thing. What is the market doing? And in certain time frames, different time frames, if you will, the context is different. We can be in a bull market, the market's going up, and then you can have a morning like this morning where the market starts out and it goes down. Then it turns around and it goes back up. That's a time frame function. So context is different depending on the rotations or time frames that you participate in. And then there's the order flow tool Bookmap. This is a high tier order flow tool. It helps us kind of see inside more of a microstructure, seeing the order flow. And this is really as close as you can get to kind of being, as we used to be, down in the pit, where you're down and you're hearing the noise of the floor and you're seeing the orders and you know who's filling the paper for different guys that we used to do in the old days when we still had a pit. Now we have a different way of seeing that, and we can see it in the order flow. But like everything, you have to vet it. You got to learn to use these tools. These are not plug and play. And most retail traders come into the business with red light, green light. Guys, let's get real about this. If it was red light, green light, you'd order your ATM with that. It doesn't work that way. Fantasy versus the reality of the business. Now let's go take a look at a couple other things here. Let's try to do this. This is the RTH yesterday. And you notice we had previous all-time high. We gapped out of it. Then we had another gap, and now we've been consolidating. So these are gaps, and we anticipate gaps to get filled at some point in the future. Now, yesterday was pretty darn interesting because we had a tail down here. And what was interesting about this was we took out the stops under this low. And the nature of the market is to take stops out. I always talk about the market goes up to go down and the market goes down to go up. Well, the market came down, didn't get under here where there's this gap, and then came all the way back in. That was a little disconcerting. And what was disconcerting about it was we got these guys, but we didn't get these. So it looked initially like, to me at least, that this is too low. And if the market couldn't get down under here, that was showing strength. So was this, and that's why I wrote this up yesterday right on the close, it was, is this an excess low? Huh, like really? All right. Is it that powerful? Is it that bullish that we couldn't get these weak buyers out who have not been tested? That was the question. So here we are. This yellow line up here is the highest volume. Remember the shopping experience. This is the highest volume from yesterday. So this is like a retail price. And then this is yesterday's high and then yesterday's low. So this was pretty interesting scenario here. So, coming in today for the RTH, it was kind of, hold on a second. I'm getting someone saying the sound is bad. Is the sound bad in YouTube? Let me know if it is. So anyway, coming in, this is kind of what we're looking at. And here's something else. This is yesterday's. Sounds good? Okay, what about YouTube? Okay, thanks. Yeah, Ben, you might want to restart your YouTube. So yesterday's high, and this is yesterday's low, and this is the question. And this is the low that we missed taking out. So this is like, was this the excess? And we had a low volume node here. Yeah, thanks everybody on YouTube. And so this is a potential area of resistance. And then we have yesterday's high, and we have this. Now, here's the other piece. And this was a bit, it's a bit, I can use the term disconcerting because what it is the market kind of gives us areas or things to be looking at. And the value area low is an important piece. Now, when the market opens, and the market opened down here, I'm going to go into that, we have the stops under yesterday's low and the stops out here, and then we have the gap. And you'll see kind of how this all shaped up. And again, this morning is not an easy trade. Not that trading is ever easy, but today was definitely more challenging. So let's talk about it and let's look at it. Now, this is the RTH open, but before we even look at that, let's go a little further here. This is that fair price or retail price from yesterday. This is yesterday's high. Now, here's what's important. Right at yesterday's high is the ETH high. So let's think about what it says, language. It's saying is, if this is the high, and I can't get over this in the ETH, maybe this is too high. Okay. I'm just hearing in YouTube. It might be YouTube, guys, because I'm also streaming in Discord, and my understanding is I'm clear in Discord. So this is too high. So if this is too high, then we have to look at what's fair. In the ETH, this is the overnight of volume point of control. The ETH low is here, and yesterday's low is here. So we're opening right here. Let me show you. Right here, right above the ETH low, right above yesterday's low. So we rejected everything above us. So that means possibly that we're going to take out yesterday's low and get into the gap. So that was the plan. Okay, thanks, Athenix. So that being the case, so we get our RTH open. So now the first thing I'm doing here, of course, is looking for what I call fuel, is to get under here and into the gap and maybe fill the gap, or who knows, right? That part we don't know. So I'm going to show you the opening trade. And there's more than one here, I think. But then things change, and the change was pretty joyous. So let's look at the short. So the idea is how to get short, where to get short. Now, I'm going to show you a couple of things. This is called a variable high volume node. I made these up, and all it is remember the shopping experience. Well, the RTH open is here, and I have to give you a couple other things. Remember our context grid sheet. We're opening in range, but not in value. Value is the previous session where 70% of the volume took place, and we had that naked volume point of control or retail price up near the high of the day. We're rejecting all of it. So if we're rejecting that and we're opening near the low, we can anticipate the market's out of balance and that we can go down and take the stops out. So the first thing to do is think about getting short. Now, the problem, of course, is where do you get short? And if we're breaking out of yesterday's range, we just want to be short. So that's starting out. The drivers, start your engines. Now, overnight volume point of control. I'm going to give you some statistics. We're opening lower inside of yesterday's range, and you have to vet these for yourself. So getting to the overnight volume point of control is about 80% probability to go there. Getting to the previous high or low, about an 87% probability. Getting to the previous value area high or value area low, a 91% probability. Taking out the ETH low, a 69% probability. Getting to the previous value area low, 68% probability. You'll see why these metrics mean something. Getting to the previous point of control, 68% probability. And let's see, there's a couple more, but I think that's enough to get us started, okay? So starting out, if this is too high, then we can reject it, and then we're looking at yesterday's low, the gap, and then there's nothing down here but thin air, okay? So first trades are shorts. Now let's talk about how do you get short. And by the way, if you have questions, please post them in YouTube or Trader Lab. I'll do my best. So first trades are short. Now, we open right here, and this is a test. And for me, this is like a direct hit. In the auction, it's horseshoes and hand grenades. There's no precision in trading. Those, and most of us think initially when we start out, it's very much predictive, and you draw a line someplace, and it's like somehow the market, it's a wall. Your line stops the market. Maybe not. So it's an area. So if I see my sellers and it just breaks right away, now I have to find a short. Now, when I say find a short, it means I have to wait for a structured trade to get in alignment with the condition of the market, which says go south. So I have to get south. So right here, I have this resting liquidity that's been sitting in here. Okay. So this is too high. I label it variable high volume node. I come down into the liquidity. This liquidity acts as potential support. Now I'm coming down, no clue. This is too high. Remember the shopping experience. Now there's more volume here, which is logical, than there is there because we left it. So I have aggressive selling. There's the delta. And when you see more delta, now this thing is only open, we're trying to look at the clock here, 20 seconds, 29 seconds to get here. So I have my selling, and now I've got to look for, I'm going to look for a short. To get into, remember what we're trying to do here, take out yesterday's low and get into the gap. Be a wonderful thing. I'm under the ETH low. Everything says go south. Watch. I get a sweep here. Now the sweep suggests, underline the word suggest, a rotation. I know my resistance is here. I know my opening swing is up here. I have to be conscious that these sellers can get squeezed. I can come up, take out the opening. It's a possibility, not a necessity, and then I can start the move. Or, let me give you the or I come here, I can't get above here, and I break. This is important. Let's watch. Sweep says downside rotation. Remember, sweep, upside rotation, sweep, mid, VWAP, downside rotation, and the shorts in this leg are vulnerable. Sweep, downside rotation. So right here, I have this liquidity, and this can act as support and resistance. I called it an order flow trigger. So what I have here is support. I have a sweep for the rotation. This is resistance, and I have the opening swing high. This can be a short here, but you got to protect out here. So that might be a stop that's too big. Let's just see what it does. Now, this right here. So here's what we have. We have this as potential resistance here. We have this as potential resistance here. So the way it kind of works, like support, break low, it becomes resistance. Let me just draw a little box here around this. Break. Here's another one. Draw a box around it. Break. So this is resistance. This is resistance. Draw a box around this one. Break. It's resistance. Going to zero. Having a wonderful time. Champagne on ice. Now what happens here? Watch. So here comes down, and you'll see this heavy selling. So right here, we have aggressive sellers. So this is going down. Now, the thing here is, right here, now this is the delta. Why is the market going lower? But now I see less sellers. Now I have more sellers here. Okay, and it's going to keep going, right? Now I see buyers, less selling. Right in here, it transitions. And this is delta divergence. What you're getting here is more sellers. And this here, when I saw this one, I said, okay, there's more sellers here. We're going to go. But right here, I get buyers. Now, the last shot for the sellers is really here. So again, I'm looking at this and I'm going, all right, and no, not so much. Where's my resistance? It's here. Right there, you can see it. So here it's maybe change, maybe just a rotation. That's resistance. There's my test. There's my VPOC migration. Right here is a very important behavior. It's very similar to what I was showing you up here, except it's coming from the other direction. And I have to tell you, I don't know what's going to happen. I can't predict anything. What I try to do is align, and then I cannot recognize change until after the fact. So I can anticipate, I can look at this and I can go, needs to hold this, and this comes down here. I want it, if it holds this, then break under here to continue. Instead, it holds this and then rejects it. Okay. That is the language of the market in the auction. This might be, I'm always going to say, might be too low. Now, the thing is, now this is resistance. This is the retail price. If it's underpriced and I come above my resistance, this is resistance, and I pull back, where am I? This becomes support. Again, no clue. Because this is happening and you're going, well, it's going to do that, and it can come here and go under there, or it's all these, it might. However, this is the breakout of, let me show you this. So this is where the stops were, and that's where that this gap high is. Okay, so this is the breakout of this consolidation down here. So at the time it's coming out, it's like, well, there's nothing here but thin air. So as of that, before it changed, that's what we were looking at. Once it comes back inside, then everything on the short is like, wait a minute. And that's kind of what it is. And I don't know about you, but when that is happening and it's transitioning, like here, I'm not really conscious of that. I'm like, I'm in this, but I know this is here. And I'm still thinking, well, okay, we've got resistance here and here. But look what it does. It just blows through. When it blows through here, and I'm seeing this aggressive buying, it is now, I'm going to use the term confusing, because it's behaving differently. Now let's come back and look at something else. Let's look at just some ideas. All right. Too low. Okay, great. Resistance. Break high. Test. Support. Still outside of here, so nothing to do. Here, resistance, pullback, support. What's going on? Get through here, light bulb going off. What about here? Blow through. What is this? Now, right here, we are where? Inside of yesterday's range, above and back inside the consolidation. Now, this could be a long, or your teeth are on the ground and you're going, what's going on? There's another place. This was the original variable high volume node. It is resistance right there. Okay, right here, resistance. Pull back, this becomes support. Again, no clue. Break high, and where am I now? I'm above the overnight volume point of control. This sets up longs. Now, and it's like, what? And that's kind of how I thought about it. I went, what? It was like really surprising. Now, so where's our next target? By the way, order flow, support, outside edge, and the next target is value area low. Well, this microcomposite VPOC, the high volume, and then this. What was the statistic for value area low? Let me get back to that. 68% probability. So the longs were to here and then inside. So it had to get inside. And let's look at this. Right at the target, this liquidity comes in. So their scale has to be ahead of this and this is here. So you see this. And this is where order flow might give you an advantage because now you see there's a seller coming in here. Maybe. And it's maybe because you don't really know the intent. But I always find it interesting when this is aligned with the statistic. So the idea is come up here, scale, and then the market to continue higher, the next target. We have overnight mid, we have this, and potentially take out yesterday's high. Who knows, right? So this is the next target, and then it has to come inside to go higher. Because this is the value, or where 70% of the volume took place. Well, bang, So now where's support? I have resistance here, and my support is here. So support is here. So when I was looking at this, I'm looking at this and I'm thinking, well, outside is, let me bring it back so you can see it. Because I have no clue. Is it going to get into the value area and keep going? Well, the value area is my obstacle. So if this yellow line, which is now the retail price, shifts up, this means that the highest volume so far for the day is here. And the way I trade something like this is called mean reversion. Underline the term mean. And that means outside in. And then we got to clear this thing. And then get through this value area low to go higher. Okay. So, and of course, I don't know what it's going to do. Now, the other thing I know is look at this aggressive buying. So this says to me, well, we got the stops out, but this is not, this is aggressive. So now I want to trade from the long side. But I have to get through that value area. So out here, outside, your support is here. If you buy this here, and I was looking at this right here for longs to come back there, to come back here. So it would be this, scale, get taken out. Okay? Pull back outside the VWAP. I'm outside edge, and I'm still trading long mean. And this is my support. Comes in, there's the VWAP, and this is where we're trying to go. Reversion trading. Pull outside, same trade, trying to do the reversion thing. Sweeps. Now this one, if you took this one, you would either get scaled where you're going to take a stop on it. You get the sweep out here, variable high volume node. It's really disturbing because what we're doing is we're pulling further outside, and it's a chop. It's a very nasty trade. So we have the sweeps. This sets up reversion, trying to come back here. That one works. Okay, so that's just reversion trading. It's nasty. And then the next idea is to get over here. And this is the IB. There's over 98% probability that we'll take out either the first hour's high or low, but we have to get over this liquidity. So we have this still in the book. This jumps in front. These are problems because either the buyers are going to consume this, and then they got to consume that. And then if we get into the value area, everything is wonderful, but we have to get through all this. We come up. Now look at the sweep here. This suggests the upside rotation. This is the mean. I was going for this because I was thinking the possibility was based on the buying to come out the top. I get a sweep. I need to clear. This comes into the book. When I see this, now this I was having a hard time with this because it's very conflicted here. I'm saying, well, I should be long, but I got a problem with this value area. Now I see the buyers come in. This here stacks underneath. That skews the book. I know my outside now is here. This is coming in. It looks to me like it's supporting it. This sets up another long, and then you got a scale, and then again looking to come back here. Notice what comes in again over here. So it's the same problem. This, and there it is again. So I have resistance. So I got sellers here, and I got these guys skewing over here. So the longs are okay for me. But I also know, and I'm saying to myself the whole time, you got to get through this. You got to get through that. You got to get out the IB. And I was also thinking to myself, if I come out the IB and in other words, I just squeeze into that value area and I come back in, it's possibly an IBF or a short to come back the other way because of the trouble. But it never did that. That was it. So this is a problem for the longs. Now, this is a very weird day for me. I have trades in it, but it's not fitting my plan very well. So not terrible, but a lot of work and not a lot of not a lot. The range is good. For example, we have support down here. So we're kind of, and when you look at the profile, you see this kind of jagged thing going on. There's not a lot of agreement in here on pricing. So it's a rotational trade. So it's a very much a reversion trading scenario. Support, by the way, is there, a variable high volume node. Same support as over here, a variable high volume node, and that sets up reversion. All of this is at the moment is rotational trading. You need a specific plan for it, and this is your outside edge. Remember, what happened here? The buyers are here. That's your reversion, trying to come out the top. What happened down here? Buyers are here. You're trying to come out the top. What happened here right now? Buyers are here. Reversion, trying to come out the top. Or not. I can't tell you what it'll do. It's not my job. But it's choppy rotational trade. So if you know you're in this kind of trade, and I consider this a hard trade because you're thinking, at least for me, I'm going, well, all right, let's get this IB. Let's at least get this IB because now I have shorts on these sides, okay? And they haven't been abused yet. They deserve some abuse, don't you think? So if I'm finding my buyers here, then maybe this is too low and I'm going to come back here. This is called mean reversion. I always say traders need to learn this. This is the first trade. Primary condition of the market is to revert. And that's what it's doing here. Once you recognize the condition and you see this two-sided trade, you need to pick a side. And for me, I'd be picking the long side only because the higher time frame is up, because I tested outside of the consolidation or micro composite, because I came back inside, and maybe I got my excess. My buyers were very aggressive. So when I got out here, it was Acapulco cliff dive, except the buyers absorbed the sellers in here, and now we're back in this range. The value area from the previous day is right, this line, this little box here. That's the value area low. So I got to get in there and maybe go there or not, but this is the obstacle. So it's hard to imagine we won't at least pick the stops off, but we could come out either side. I want you to know. My inclination is we may test this high only because we already got under here, and it can do either. Okay, it's not for me to say what it'll do. I just think that the possibility is that we're going to get the shorts out. What the market often does is it'll get shorts in on one side, so go down to go up, then it can go up, go down. So we might only squeeze and come back, or whatever. So that's not, I can't tell you what it'll do. If I knew what something would do, we just, get the mortgage out and, put it down. But no, can't do that. So that's the current state of the market. You see the reversion. You guys in TraderLab, if you had a hard time today, here's what's so important. There's going to be days where the market and your plan are not in alignment. It just happens. And when it happens, that's where risk management comes in. If you maximum drawdown, because absolutely there's days where you're going to be zigging, the market zagging, and it does not make sense. It does not get clearer until hindsight. So when you're in it, you can be just taking the trades you typically take, and the market's like somewhere else. It's just part of it. And fortunately for us, it doesn't happen all that often. But when it does, you're going to be taking losses, and you may hit a loss limit. I hit loss limits. I take stops. It is what it is. Fortunately, the loss limits don't happen too often, and the stops happen almost every day. Not every day, but most every day. So that's just our business. But when you recognize, once you start seeing behavior and you can reference the locations, then you have something to work with. And what else do you know? We're inside yesterday's range. So we came out, we're inside the range. And you notice so far we're still holding the range. So it's value area, low is there. That's an obstacle. Staying in yesterday's range is positive for the long side, and it can still do either. The thing that gets me a little bit more on the long idea is the aggression of this buying. You see, when you see this kind of buying, other than being a counter, let's say you could sell these, but you're only, for me, when I look at these, I'm thinking I want to be long because I really have support right here. See it, it's from here. And this is still in the book. Now, why is this in the book? I think it's support. And I got my level. And then again, what I think doesn't matter. I see the pieces that suggest higher. And I just have to get over here. And then this is going to be very important. Does this make sense? And by the way, no matter what trade plan you have, you're trying to align and adjust with the market. So you're always going to be behind the 8-ball when the market changes. In other words, you won't know it's changed until you're following your plan and you're getting stopped because structure. If we're trading structured trades, the structure's changing. And then you're not going to know because we're always on the hard right edge. We're always making a decision here. So, if you're selling this, if that's your, now for me, I don't have any shorts now. unless I'm going to trade these rotations. I could do that, but let's say, for developing traders, this is, for me, I don't want to use the word easier, but to me, with this buyer, and this is a consolidation, I want to be buying the outside edges because this buyer, whoever these buyers were here, this is very aggressive, right? And the short got trapped and we're back inside. I'm just giving you the thesis. If I'm inside yesterday's range, I came out and I came back in. All we did was rip the weak longs out, which needs to happen. For the market to go up, it needs to go down to go up. It goes down to take out the weak side, and also for inventory accumulation if we're going to have continuation to the upside. Now, is it going to come out here? I have no idea. But there is a probability around 98% that we take out either the first hour's high or low. Now, what happens after that? No clue. Let me ask you, what do you think? First hour's high or taking out the first hour's low? What do you think? Thanks, repeat. You go first. That was my reference to the mortgage. Thanks. Where I lost the chat. Okay. YouTube, how we doing? Please give a like. You may not like the market today, but I hope you like the Trader Lab. In this condition, when it has this kind of change, I'll take more stops until I kind of get it. Once I get a sense now the market is kind of, it's resting here. This is like running a marathon, and this is just a consolidation. It also, you might say, could be a bit of a pennant. Wouldn't you might say that? Maybe. So we're making lower highs, right? So this is sort of a pennant-y, all right? So for me, it's longs. And then, whatever it does, it does. What I don't know here, of course, is are we going to get into this value area? And are we going to pop and then revert back in and accept this area? Or, and the other part is, since the higher time frame is bullish, are we going to come back here? So the possibility is pop out, revert back, or pop out, who knows, and then here and maybe out the top. I'm saying those are possibilities. That's all, And but they're not predictions; they're just behavioral. It might do this, it might do that. So bang, bang, back, or bang, test, back here. Possible. Okay. So, and here's something else that I put on the chart from yesterday. This is a low volume node. I want to show this to you again because I showed it to you this morning. I should have spent a little more. This is the fair price. This box, this orange, is what's called the value area, 70% of the volume. The high so far is here. You'll notice this behavior here. This is a low volume. It's right there, a low volume node. And it kind of means that, like, this is too high, this is too low, this is the fair price. And we fell out and we closed in here. This is resistance also. And it's strictly a profile thing. And it's because, think of your shopping thing. I'm not paying that. Yeah, but it's on sale, retail. But then if we fall outside, we don't get back here, this is a form of resistance. So it's around 69, 29, 30-ish in here, in this area, this range. So if we come inside this value area, we just have to be aware of that. And then if we can get through here, we go there. If we don't get through here, we can just rotate in here and build value at a lower level. So that's just something to kind of put in the hopper. That's where that low volume area is, that 2930. So if I come out here, I can go there. And I'm not saying it will. If it goes there, that's resistance. If I get through there, I got that. Okay, so those are the levels. Now remember, we're looking for what? To come out the top. And it's going to be very interesting as far as what happens here. Okay, so let's see what it does. Katie, are you in the Trader Lab? If not, come to Trader Lab. There's no quick fix here. Um, there's no. I don't use indicators. I do use order flow. So our traditional indicators are, oscillators, RSI, whatever they are, um, moving average. Pick one, draw a trend line. That's kind of traditional stuff. Um, I don't use those, but I am aware of classical bar charting, and I am aware of aggressive buying and what happens, what a consolidation is, and I am aware that we have buyers and sellers on both sides of this. I am aware that I got down into this gap and I found my buyers. And the fact that my buyers came for this after taking the stops out here, and that's it, that says belong. So until it fails, the old saying is, if it's not broke, you have to stay with the direction. So for me, it's longs. I have no shorts now, unless I'm trading the rotations. I tend to attempt to stay with one side. It's easier because, and their only reason, don't forget, early on it was the shorts, because we were out of balance, out of value, and we took out yesterday. We were outside of yesterday's range. So that's a qualified, those are shorts until we come back. Once we're back, then it's longs. The thing with trading, what makes it difficult is the randomness of it. The rotations are random. Uh, if when you come down in time frame, which is what we do, uh, we're dealing with this kind of stuff. Is this a short? What is this? There's resistance. What do you do? You need to know. And I always say it's always best to trade from one side, because now you're concentrating here. You're not, you know, all over the place, flipping and flopping. If you're flipping and flopping, you're going to hit your loss limit like very quickly before you give yourself a chance to let the market kind of settle in, and then you can identify locations like this, long longs. So there's your longs. So in these sellers that are up here and here in these legs, they haven't been abused, and they deserve it, don't you think? So this is really our resistance, and it's the IB, which has over 98% probability to take out first hour's higher low. I don't know about you. I'm leaning towards the long side, and it may take out the low, right? So that's where we are. Does that make sense? Apparently, we have somebody short Trader Lab who says, no, those shorts don't deserve to get squeezed. Well, okay. Everybody's got to root for their team. The thing about the shorts is these buy stops are, you notice we have lower highs. So that means as we have lower highs, I mean, it can go either way. My inclination is out the top. The thing that is a little questionable for me, and it will be answered pretty quickly if we come out the top, is, do we only pop and come back? This is my resistance. I also got the overnight mid. The overnight mid has an 81% probability. So I got this too. So I can come here, fall back in, and mean revert back to this, or work back to this, and this. So this is what I know. And it doesn't have to do any of that. So my inclination is longs, to squeeze the stops that are accumulating at these lower highs. Retail traders, if they're short, are going to be moving their stops, and over this high. The energy to break this high is here. So that's my plan. And you stick to it until you get stopped out, or your trade management process takes you out of the trade. So, Katie, if you want information further, but by the way, there's no uh, trading. You can learn how to trade. If you know how to shop, you already have a mental connection to pricing in a high time frame. What we're doing in here is the same thing. This is too high. This is too low. This could be a month in your supermarket or a week. You know, if it's too high, you'll buy a different product or you won't buy it. If it goes on sale and this is the fair price, you'll buy it. Throw four in the cart. And then the supermarket, and this is for everybody, raises the price. And so what happens is the price comes back to the retail where buyers and sellers will interact. But in our market, what we have is something else. We have buyers above these swings. So if the market comes up, then those buyers or buy stops become buyers. And then there's that buying. So the buying is built in on both sides of the rotation. That's why the market can rotate down and there's buy stops in this leg. And then we can rotate up to squeeze these guys. Then the longs in this leg can get abused because there's sellers built into each leg. It's no different in the higher time frame. In the higher time frame, we're doing the same process. In other words, the market goes up, the sellers are under here. If I take out the shorts here and we're going to the moon, if I come down, I take out the sellers there. Remember the sell stops, and there's sell stops under here. If I come under here, I take out the sellers. Now there's buyers who got short this morning, including us. And then we turn around, and if we find our buyers, then we turn around to come the other way to squeeze the shorts. The question becomes, how far? Do we just stay in this, maybe do a little pop, take out the shorts, and then rotate and build that value in here, equalize this, or something more? We won't know that. So those are the questions. I don't have the answers. The participants will give us the answer. So what we have to do is think about this. If the shorts are here, the buy stops are built in, the market rotates up. We're now coming up on their buy stops. In this leg, their sell stops. If I rotate down, I'm going to go down on their sell stops. And this is what rotational trading is. And the only way to trade this, in my opinion, it's just, and I'm going to say for me, not for you or anyone, is outside in. And that's called mean reversion. It's the primary trade that traders need to understand, because reversion trading happens in all time frames. For example, in a higher time frame, this is reversion. Yeah, what am I talking about? This is the highest volume in this day, this yellow line. This is like your retail price. Currently, in our current developing day, this is our retail price or fair price. In this whole 3 days previously, this is a retail price. So if I come outside, I can come back there. That's reversion. Now in a shorter time frame, I'm trading rotations. I'm actually trading outside in to there. But when I came outside here, I was trading outside in to there. I know, confusing. But what it is a vertical integration of time frame. So this is the fair price for these 3 days. This is the fair price for this 1 day. If I can get in here, there is a possibility, and I'm not saying it will, come there. Or while I'm sitting here, I can just be doing this, and this yellow line outside in is reversion. So I'm outside to there, which is the same as outside to there, different time frames. Guys, I know this might be like throwing a curveball at you, but this is a vertical integration of time frames. The behavior's generic. So it's always doing the same behavior in a multiple time frame. Think Russian dolls, Matryoshka dolls. They're inside each other. So if you're trading a short time frame, it's the same as trading a higher time frame. Does that make sense? Hope it makes sense. Might be confusing, conceptually, to think because we have to think in these multiple time frames. I trade ETH, Renika, in the morning, pre-RTH, but I'm not trading it overnight per se. Other traders in TraderLab do trade ETH, and they could probably answer that question for you. As far as what's their IB? You know, what kind of levels do they use? That's a great question there are a fair amount of traders. We got traders all over the planet. So they're all trading, their time frames and different products too. Um, NQ is pretty popular. ES is a primary product because of its depth. Uh, but we have, whatever you want to trade, you trade, gold's pretty popular these days. And of course, stocks. Now, I don't have too many stock traders in the Trader Lab, but this process that I share is a generic trading process. In other words, you can plug any market into it. Of course, you have to vet the market, but markets behave this way because this is the primary mode that the market operates in to figure out valuation. And the only reason we have a market is to figure out what is something worth, and that valuation is always being discovered. So that's what this is all about. Yeah, here it's trying to figure out what's too low, what's too high. And remember the interesting obstacle in this. In the higher time frame, this is the reversion. Where did it come? Right there. Then what's the next issue for us? The value area low here. So this is the reason, at least from the auction point, of coming here. This is the obstacle from the auction because this is the outside edge of value. And if we're out of value, it might mean this is too high. We have over 98% probability of taking this thing out. And then we have to say, well, now what? Do we just do this and come back and hang out, or do we squeeze further? The thing that needs to keep you have to keep your mind on is this buying. Where have you seen buying like this lately? And then this is the support. And now we have our resistance. This is our support. This is our resistance. This is our support right here. And by the way, here's another thing about these support levels this is important. You'll notice that this is a swing low and the buyers were here. Now, this one's higher. That's okay. If you have structure for it, this is a viable long to there, and then you're looking to come out the top. If it doesn't, you come out here, you take the stops out under here, because that's where the stops are going to be. You get this swing, you have this here, and maybe you're taken out of your trade from over there, and now you get a trigger here. This is a trigger, and now what are you doing? Same trade. This is what reversion trading is. You're primarily trying to get back here and out the top, and this is part of the thrill is when is it or will it do it? And often what the market does, and I'm just saying this is just a observation, it's not statistically based, is remember what the market does. The market goes up to go down. So if the stops are here and under this swing, what do? We take them out. Isn't it the same possibility of an inventory grab? 2,000 icebergs. The buyers that were here, this is part of market mechanics. If this is let's go shopping together. If this is a bargain and I have icebergs buying the limits, absorbing, and there's the sweep, they're taking the other side of this. Is it possible if we go on sale again, would you throw two more in the cart? Is it possible if we take the weak hands out, the retail traders? Look, there's 1,100 stops there. Lovely. And now the stops are coming out here, 1,200 stops coming down, that these buyers that were there might show up again. And there's your liquidity. That's why this is a long. There's buying going on these outside edges. Now you do have selling up here. You see? Now, we don't know who the buyers are. We don't know who the sellers are. But let's remember what we do know. We know there was aggressive buying. And we know there's buy stops accumulating above these swings. So what we know is potentially, that's all you got, we're going to take these guys out before the end of the day. I can't say they will because we banged into some important resistance. But we have a bit of a conundrum here, don't we? We're either going to come out and either just test out, fall in, and revert. In other words, the same thing from a higher level and come back and maybe, wherever, or we're going to plow through this thing and continue to squeeze. That's as far as my ability to look forward. I can look forward and anticipate behavior. I cannot predict anything. So I anticipate the behavior, I can anticipate where it might take place, and I can anticipate what might happen and why. I can't tell you if it will happen. I can tell you that if it changes, I will recognize change. And then I have to adjust or I don't have a plan or location. So that's kind of what happens. But by the way, on that question about the ETH, use the link in the bottom of YouTube. There's no cost to come to Trader Lab. All you got to do is verify your username for Discord. Make sure you're not spam. And then you can ask in there what other traders who trade ETH are doing. Those answers exist in Trader Lab. There's a lot more in Trader Lab, too. There's a library of webinars, some of them up to 4.5 hours long of real-time narration. Uh, there's a lot of tools in there that you might use. We are inside yesterday's range. Now, the outside edge is going to be out here, this low volume. We can still rotate down and either just fall out, right? That's possible. Or we've already got this done because of the pick. I call these stop picks. But the old saying, oh, they picked my stop off. No. Most of the time what it is your stops with everybody else. Me too. So over the years, I kind of figured, a lot of us think we're victims, like they went for my stop. You ever say that? Most of the time, what's really going on is your stop is piled up with everybody else's. And the market is always seeking to do business. It'll seek liquidity. When these stops got taken here, did they go for your stop if your stop was there? Or is it just possible your stop's with everybody else and your stop should not be there? It has to be outside someplace just for this reason. Now, the other part is suppose your stop is there and you get stopped out. Well, then you go, here, you get stopped out and you feel like you got ripped off. Well, maybe if your stop was further out, you wouldn't be. Or if you got stopped out, then if you know you're in mean reversion, which you would know if you're in Trader Lab, you might say, well, look, all they did is they got these guys, are these buyers coming in? And then you'd put the long back on for the same trade. That's it. And the other part of this is when you put a trade on, and this is reversion trading, you're trying to get here and then maybe out the top. The primary objective of any trade is to get risk neutral. By the way, this is a little problematic right here. Let me show you. See this? This is too high. This is the new retail price. Stops are here. This now is the new retail price. Notice what it's equal to. Just going to draw a little line. Right here, this is support, and we're looking for it to push off. It does the opposite. That says this is still, at the moment, too high. Then what? Possibility to rotate down. Now we have to see to where. And this is something I've shared in Trader Lab. You could use this. See how it holds here? There's buyers here, absorption, and my resistance is here. Now, I don't know at this point what it's going to do. I'm still thinking it's going to come out here. This shifts up. Now, there's two possibilities. If this is the new retail price, I can push off and go along towards the target. If it breaks the other way, now it's saying, this is language, too high. And now the longs might have a problem. We'll see what it does. All you can do in trading is try to stay in alignment with it, So now you just have to see. we have not been able to get back into value. This is kind of the problem. You know? So unless we can do this, then we're going nowhere. So it's very much a mixed bag. That's all I can tell you. You know. So if you're going to trade reversion, you always have to be thinking about getting risk neutral. And then whatever happens. So this is a problem for the longs. So you just have to see what it does here. But this is a very contested behavior. There's no magic, guys. It either it fits, but it's been changing quite a bit here. You know, it looked to me like the longs had their shot, um, and the 98% probability is to come out the higher low, first hour's higher low, which is either here or here. These buyers, though, I don't know. So we just got to watch this. Okay, now we have resistance here. Can't clear this, then we're not going anywhere. Then the longs could be vulnerable. So we have some delta here, big selling. We have a sweep. This is important to observe here. What happens with these guys? So pick a side. You know, for me, I'm trading the long side. Now this would have me concerned for my longs. But here's the other part of it. The trade plan suggests to get risk neutral on every trade, of course. And this is where this is. This is mean reversion. So longs, 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 all of them are getting scaled. And then it's either trade management or you're going to get popped and you'll scratch or you'll take a few burgers out of the thing. You would still be profitable, but you're not really getting what you want to accomplish here. Um, is the mean reversion not viable for the long side? I would say it's very questionable now. At this point, uh, I really want to see what happens down here. But I'm not seeing, I would be in park at the moment. And it's because of this. Until this happened, I was okay with the idea coming out the top. This changes it. It doesn't mean that I would take a short me because I have to see what happens out here. I'm still in yesterday's range, but if we start falling out of this again uh, and we come back into the gap, then this can continue on its merry way into the gap, and then the buyers are exhausted. So I don't know. You know, I can't tell you what it will do. I know what it's not doing, you see. So if it's not getting out here, in spite of the buying we had earlier, and I'm in a consolidation, I really have to be patient out here, but I am having a problem. I mean, I should say that I'm not, but the market is. And that is lower highs, and we're not squeezing these guys. We come up, but the sellers are more aggressive. Again, this is my right here. This is the problem. This is the problem. So I would say the longs are tenuous. Just be patient. The thing about it is, would you keep taking longs? I would say at this stage, I would just be patient because there's always other trades. It's not like you have to do anything. I don't. I'm very patient. I just go, well, this, because the other side of this is I got stops under here. So here's the deal. I've got stops, 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 lower highs. I've got this. I had it here, and I thought, well, okay, here. It did the same thing here. Here, came down, found our buyers. The question is, are we going to find our buyers? Well, I'm getting a question about the possibility of a gap fill today. Uh, well, initially that was the idea, um, to get down, to push down, get outside of the consolidation we've been in, and get down into that gap. It's really problematic here as far as if we're going to do that or not. I really can't have an opinion about it. I can just follow what the behavior is, and the behavior, uh, we're not squeezing these guys that are right now above us. And unless we do, then we can fall out and we might come back down here. And there's also a small possibility, and it's not a high one, that we don't take out this low and we just stay inside. It's possible. I don't think it's likely, but it's possible. I mean, when you're working with a 98% probability to take out first hour's high or low, you would kind of go, well, you know. And I would think if you're in the range that it was leaning up here. But the obstacle again, and I don't want to keep repeating it, is this was the next target for the longs on the way up, which we got really. So, right there. So we're not getting past it. We have to get past this to have any more upside. So we're just in no man's land. So this is no man's land. If it doesn't fall out here, it's still okay, but it's so mixed. So I don't know. Yeah, I just have to say that. So I don't have an answer on what it will do. I never do. But I would say often it's much clearer than this. I know we can define these outside edges, and we also can see there's trouble for the longs, uh, based on what's happening in here. And one side's going to give away. All right. I think you guys can see the conflict in this, because we're inside the range. The thing that stops it is the not being in value. Um, this is really where it's problematic. So we'll just have to, all you can do is take your trades, work to get risk neutral, and whatever happens, happens. That was very aggressive buying. So that was giving me this lean on the long. Now, the other thing about this is, remember, we can have lower highs and we can still take this out. The fact it's a lower high is very much like, a pennant in many ways. But you got to respect from the auction that that's an obstacle. So I see a bit of conflict in this whole thing. So there's no way to. I think either side has a fair shot here. I'm kind of inclined to think the long side might have a bit of an edge in this thing, but it could go either way. So I don't recommend anybody take any trades in this. This is really like almost a coin toss. I'll tell you. You can make a case for being out of longs. You can make a case for long mean reversion. You can trade either side in this. And it's not which side is going to, quote, win. One side will, but there's just no way. So we can just kind of be stuck in here too. The thing with this is, the other part of this is another piece of this. Now, if we can come up in here, so this is our high volume in the intermediate time frame. This is like your volume point of control. It is actually, and it's where most volume took place in here. This is yesterday's retail price. It might be too high. And this is this value area where 70% of the volume took place. And this is our resistance right now, which is where the high of the day is. If we can, come up a little higher, do a little work, we can create value in here and be above here. The only thing that's kind of I think is this IB with the shorts in the market in here. We could pop it and then come back in. That's sort of what I'm thinking on this, but this is really just nothing. Rotations. So if you can trade rotations, you can operate in this. You have to be very, very careful because of the obstacle at this. This is really what's jamming the whole thing up, in my opinion. Is we're in this, and it's not auction. Uh, when you have an area like this that was just down and back, this is auction. You see, this is where the volume is. This, we didn't spend any time there. So we're doing it today. So we can just fiddle in here and rotate. Um, I would think it would be interesting to come up here and break this high and then maybe come back in. So I don't know. So it's two-sided trade, and we're just doing an auction in here. And if you're looking at it, you'll see we're just rotating, and maybe we won't take out either the first hour high or low. We could do that also. We could just stay in here and slosh. And so that's another possibility. It doesn't happen too often because of the 98% probability that we're going to take out first hour's high or low. So it can do either. I'm inclined to think it's going to take the first hour's high out. I don't have, but I can't say it will because it might just stay in this. So for me, and not a recommendation, I see problems with the longs, but I also see that we're reverting. So it's just this, okay? So you pick a side. I'm only going to say for me until it breaks, it's not broke. So I'm inside the range. I'm a little more inclined to be long. So I'd take one side until it fails. So the way I tend to work is I'm not trying to sell this, buy this. I pick a side and I try to think which side might have an advantage. I do think the longs have a bit of an advantage, but not much. And it's decaying. So it can fall out. See, it works two ways. Shorts have their stops up here. So far, they haven't been abused. They deserve it. And the longs have their stops under here. If we fall under here, then the buyers who've been accumulating in here, they're going to get run over. And that's really what happens when you have a consolidation. One side gets thrown under the bus. So which side is it going to be? Pick one. Could be either side. That's it. I don't really have more for you guys today because I cannot tell you what it will do, and I never can. I can tell you what it might do and why. And it's really a dilemma here because it will resolve. And I can't tell you which one because nobody who trades can tell you what it will do. But we always know what it might do. So that I know. I know we can come out the top, squeeze the shorts out, and then come back in after they're out, or we'll just fall out the bottom here, and anybody who's long can get abused. So that's it. You guys have questions? Lose the chance. Well, we are reverting still. You can see this is what we're doing here. This is reversion. So that's all we got going in here right now. Outside in. This is again problematic. This thing. I need to get above this to squeeze these guys out and to do this. If I can't get above this, then it's just more of this. See, this liquidity is in here. There's really nothing above me. Greenhorn, I'm seeing more buy ice, yes, and there's a lot more buying icebergs. But we've got icebergs on the other side. They can just be trading a range, or we don't even know, what they're doing. We never know. I just know we're in reversion trading. If you're adept at mean reversion, you can be operating in this. Um, and I know we're a lot closer to the first hour's high than we are to the first hour's low. I'm always trying to evaluate. It's like if you're a jury, you're kind of weighing the facts, but we're very conflicted here. So, and this is here. This is supportive. This skews the book, but they can disappear in a heartbeat. You know, So, and you can see the stops on both sides of this. 197 came out here. You've got 75, 35, 100 and change out here. So what you have is shorts. Now, if you're trading this, think about this. Would you be what would you be doing with this? Where does this trade fail? Doesn't it fail up here? So if you're trading the short, why would you be doing this? I don't know. I guess it's time frame oriented. If you're trading the longs, where would you stop be? Well, you might trail it. I know for me, when this happens, if I'm on a long, I'd be getting out of it. As soon as it breaks here, and here especially, be out. So if I took this long down here, that's fine. You know, be out of the, if I'm only, and I wouldn't run anything heavy in this. It'd be very light, you know, come out here. You get a sweep that says counter rotation, and you're trying to come back there. It's just mean reversion. If you're going to trade reversion, you should be waiting for the outsides, not start getting in here. Because now the stops from these guys are going to come under here. And if I can't get above this, then these guys get thrown under the bus. So personally, I just don't put my stops with everybody else. But I can tell you for the longs, I'd be out of there. Because I'm only trading this. I'm not trying to do anything else here. If it comes outside, I would do something a little different. Uh, but I don't see it. This is almost like get in your Barca lounger, get your pizza ordered, and just wait for it. Wait for something to develop. Wait for locations. You're going to trade the reversion. You have to wait for the outside. You're trying to get back to the yellow line at 6,900, which is VPOC, and you're trying to come out the top and squeeze the shorts. I have no idea if it's going to do it. Why is there a ground stop at JFK? I got about 6 minutes left, guys. I can't do anything about the condition of the market. I can only try to share with you how to participate in it. Also, in your trade plan, if this is not suitable for you, your job is not to throw dollars away, but to wait for a market that's more suitable. If you can trade mean reversion, you have to have substantial discipline and patience, or else you can have a lot of problems in this condition. The discipline is to wait for outside edges. I like stop picks. I call them a stop pick because that's taking weak hands out. And then if that's all it is and it's an inventory grab, then this is okay. This one, not so much. because then my risk is out to here, you see. So and by the time I would get long, I've only got here, you know, by the time I'm in this thing, I have enough to get risk neutral, but I can also, but my stop's got to be out here. So I can't, this one I would not take. And it doesn't matter what happens to it, because for me, job number one is get the risk off and take intelligent risk. And if it comes out here this time, and this is the time it doesn't, say la guerre. It's just one trade. So you have to kind of look at this, not about FOMO and the need to do something, but the need to be patient and only take intelligent risk. I don't consider this one as intelligent as that one. This is good risk. Range. This, you have less range and more risk. You see what I'm saying? So, and it doesn't matter. This might be the one that takes these guys out. You see? So, something to think about. I hope you got something from today. All right. Weather-related ground stop. So if you're flying in New York, guys, try Newark. Might be better. This sweep says the possibility to come there. That's what it says. This is the location. Now, I wouldn't stay in this trade. I'd just get out of it. I'm telling you right now. Me, not you, me. But this trade hasn't failed until it comes under here. So this is where your trade plan comes in. You sit through the counter rotations in a balance and say, gone down with the ship, it has to take this out, and you're going to sit through this. And psychologically, is that okay for you? These are questions, but the answers lie in your trade plan. You're not making it up here. You need to know that if this behavior takes place, what does it mean, and what are you going to do before it happens? When it hits here and it bounces here, all is okay. When this shifts up, that's okay until this, because now it's too high. Is that actionable? And do you know what you're supposed to do when it happens? Those are the answers. Because when you come to trade, you don't make it up here. The plan guides you. All the work is done outside. When you come here, you just follow what your plan tells you to do. And you measure yourself not by the outcome of your P&L. You measure it by the edge you vetted, which is built into your plan, and did you follow your plan? Because the dollars will come to you if you have the discipline and you've done the work to only interact when you have a statistical edge. And you would need to know when this happens, statistically, is that a reason to get out or not? In spite of what might happen after that. Because the outcome of this specific trade is random, not over a large sample size, what this might represent. If this is what gives you the edge when this happens, even though today we may go up and do whatever, that's what you need to do. And that's all trade plan based. Please give a like. Hope you got something from today. The market is what it is, and all we can do is work with what it offers. Having a trade plan, understanding this business, being patient and disciplined is what will keep you in the business. The market is what it is, and all we can do is take advantage of the opportunities it presents and not react to FOMO and lack of discipline. That's ultimately, with a plan, with an edge, it's what gives you an opportunity for sustainability, and that's what the Trader Lab's built on. Use the link in the bottom of YouTube if you want to visit the Trader Lab. There's no cost for it. Take advantage of this opportunity while it exists. It's not going to exist indefinitely. Appreciate you guys visiting. Please give a like on the way out, and I look forward to seeing you tomorrow.